Hey everybody, this is Jim at SP500chart.com. It's a little after 5 o'clock on April 25th, 2013, and we're going to look at see what took place today using the S&P 500 index as our indicator of overall market health. And before we do that, I need to read this to you again. And that is, the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I could draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I am just a guy who draws lines on charts. Let's take a look. Okay, we are looking at an hourly chart where some of my smaller trend lines are all over the place. Just ignore those. It's a matter of, just ignore them for now. This is just to set the stage for our general picture of what may be going on here. First off, I want to mention that we still have this very important support line right at roughly 1540. That is a line that, even though we're 45 points above it, that's a line to watch, because when that line breaks, the S&P is almost certain to give up at least 40 to 50 more points after that break. So, you just need to know that. As long as we're above it, then, hey, you ever watch Duck Dynasty? I sounded like Uncle Si just then. Hey, until this line breaks, hey, it ain't going nowhere. If you don't watch the show and you don't know what I'm talking about, my apologies. But anyway, we had a double. Well, I don't want to say that's a double left shoulder, because I'll be honest with you, we don't know for sure that this is a head and shoulders top. But because we've got this line that is horizontal, and we've already toyed with the idea that this rising channel can be broken down, it looks to me like we need to be open-minded to that. So, as long as we stay above 1540, more power to you. If we get a tag up here, up in the middle to high 1590s again, I did not start my short position today. I'm waiting for a legitimate touch on one of these high levels up here. Either that, or I will wait for a back test. But if we get on up to that 1597 again, or even higher to 1600, I think that's a no-brainer. Not a big position, not going all in there by any means. In retrospect, that might be the thing to do, but we can't do it in retrospect. We have to do it with the idea that the strength of this market is a force to be reckoned with. So, anyway, it's looking more and more like, if this does end up being a head and shoulders pattern, that it will be a double-shouldered and double-headed pattern. How often do we get those? Well, we have not really seen one here. You could almost say this had a little triple top here, and this had a little bit of movement to it, going here and there. But really, to see something like this, you need to go back to the top that formed in 2007. That was clearly a double-headed pattern right there. However, it did not have double left and double right shoulders, just double-headed. And this back here in 2000 is a little bit of a mess, but it's a little bit of a double-headed pattern. You had that initial surge up to the mid-1500s, then you sold back down to roughly under 1400. Then you came back for another go. Then it sold back more steeply, and that was that second top there was kind of the death knell for that top back in 2000. But there is a difference here. And one of the big differences is the fact that look at the scale of these two tops. And then look at the scale of what we're talking about here. Okay, look at that again. These two tops this top right here took about 6 months to form. This top right here took about 4 months to form. And so far, what we're considering as a top has taken 2 months to form. So we're not quite there yet. Now, if you look at this as being a neckline of an even larger Head and Shoulders, okay, then we could be dealing with something that is going to take 4, 5, 6 months to form. But right now, our first indication is going to be taking out this support here at 1540. If we look at a 10-minute chart, we can get our lines put back in their proper relationship to price movement. You can see that again today, the S&P took out our top line, even in this really a very aggressively slanted channel. Look at how the S&P is just willing to go, pardon me, but say, to hell with sense and logic, we're just going all in. It's like whenever there's a dip, people are just, what does this say to me? This to me looks like just kind of unbridled enthusiasm. Now there is an alternative, and that is we move this line here and we just say, no, here's our pattern, we're in an ascending wedge. Well, that could be, and really for the sake of where we've seen things go, why not let's leave that there. I really don't like that so much as the channel, but let's just do that. It's really going to probably mean the same thing in the long run anyway, because the thing that we're looking to see happen is this bottom line break. And you can see today that that we came back down, we tagged this top line again here when we redraw that line. But you'll notice that's also a very pretty solid back test of this other rising wedge. Again, we move that line. You could say this rising wedge that broke down, that got back tested today. Maybe we get one more little move up, and then guys, I think this starts to look like rarefied air up here. And well, I just really can't think of anything else to add to it except for watch this line. This line, if it goes, then in all likelihood we will come back down to test this rising support line here in our channel that's been working since the middle of November of 2012. If this line breaks, then I think we're almost destined to come back down and test that 1540 line once again, at which point I would expect a bounce, because I'm thinking in terms of a top here that where we would more than likely come down here, then make another bounce or two of lesser magnitude than what we've seen in these two. At least that's my guess right now. And really, let's be honest, what is technical analysis but looking at the chart and saying, from everything I can see, it looks like it's an educated guess. And I want to reiterate, A, this is not a Head and Shoulders top until we get the right shoulder and a breakdown of this neckline. B, nothing in the chart is infallible. The only thing that's infallible is what we look back to the past on. What we expect in the way of future events is totally fallible. There are two things that can screw it up. One thing is something that happens in the news cycle that is thoroughly unforeseen and a major item. Okay? What else can screw it up? Well, bad analysis. And guys, put your mind to work at this. Don't trust me for anything. I think I've done pretty well. But don't ever take my word for it. I'm going to be like the preacher who stands up in front of his congregation on a Sunday morning and says, look, I know you love me to death, but don't take my word for anything. You need to satisfy your own mind, and in the case of the preacher, satisfy your own heart, and try and test everything that I present to you here. So guys, there you have it. We're looking at a couple of lines, thinking if this blue line breaks, then we come down to test this yellow line. If the yellow line breaks, then it's pretty much, I think, a sure bet that we come back down to the 1540s again, where I would expect yet another bounce. So there you have it. That's your video for the trading day ending April 25th, 2013. Thank you for watching this. Thank you for subscribing. And if you're not a subscriber, hey, thank you for going to sp500chart.com and seeing just how easy and affordable it is to get these videos delivered to you every day after each day's close. Thanks. Take care.